powerful indicators out there, the Ichimoku Cloud. And I promise, by the end of this, you'll see it's not scary at all. It's actually pretty brilliant. So what if I told you there was one single indicator that could show you the trend, momentum, and key support and resistance levels, all at the same time? I mean, is that even possible? One chart to rule them all? Well, that is the exact promise of the Ichimoku Cloud. You see, its full name is Ichimoku Kinko, and in Japanese, that translates to a one-glance equilibrium chart. The name literally tells you its superpower, to give you a complete picture of the market's balance in a single look. No fuss. And the story behind it is pretty cool. It was developed way back by a Japanese journalist, Goichi Hosoda. He wanted to create a single all-in-one tool. So instead of trying to juggle a bunch of different indicators, he built one that does the work of several, telling the full story of the market in one clean visual. Okay, so we've got the one-glance philosophy down. Now here's our game plan. First, we're going to deconstruct the cloud and break it into 5 simple parts. Then you'll learn how to read its signals. After that, we'll walk through a simple trading strategy you can actually use. And finally, we'll figure out if the cloud is the right tool for you. Let's do it. All right, let's dive into the heart of it. The first step to mastering this thing is to just break it down into its 5 key components. It might look like a mess right now, but we're about to make it crystal clear. And listen, I get it. At first glance, it looks like spaghetti on a chart. It is a lot to take in, but that's the illusion. In reality, it's just 5 distinct lines, and each one has a very specific job to do. They all work together in harmony to paint that complete market picture. So let's meet the team. Think of them as 5 specialists. You've got the conversion line, the baseline, 2 leading spans that actually form the cloud, and this unique lagging span. We're about to meet each one and see exactly what role it plays on the team. First up, we have the conversion line, or Tenkan-sen. This is your sprinter. It's the fastest moving, most responsive line on the chart. It's basically just the midpoint of the last 9 periods. And a period is just whatever your chart's time frame is, 9 minutes, 9 days, whatever. This makes it the very first to react to price changes. Next is the baseline, or Kijun-sen. Think of this as the slower, more stable cousin. It looks at the last 26 periods, so it gives you a much smoother, more reliable view of the medium-term trend. And here's the key. The relationship between this slow line and the fast conversion line, that's what's going to give us our main trading signals. Okay, now this is where it gets really, really cool. Leading span A and leading span B, these 2 lines form the famous cloud. But here's the twist. They're plotted 26 periods into the future. This isn't magic. It's not a crystal ball. It's a calculated forecast, literally giving you a glimpse of potential support and resistance zones before the price even gets there. How cool is that? And just as we have a forecast for the future, we have a confirmation from the past. The lagging span, or Chikou Span, is simply the current closing price, but it's plotted 26 periods behind us. You should think of this as the reality check for the current trend. If today's price is above where the price was 26 periods ago, that confirms the trend has some real strength behind it. So let's put it all together. The space between those 2 future projected lines, span A and span B, is what creates the cloud itself, also known as the Kumo. This shaded area is the heart of the indicator, giving you an instant visual map of where the market might hit a ceiling or find a floor in the future. Okay, so we know all the individual parts. Now let's learn to speak the language of the cloud. I want you to think of it like interpreting a market weather forecast. Is it sunny skies ahead, a little cloudy, or is a big storm brewing? Reading the basic signals is actually super simple. First, just look at where the price is. If the price is trading above the cloud, the big picture trend is bullish. Simple as that. If it's below the cloud, it's bearish. Now, for a more immediate signal, you want to watch for when that fast conversion line crosses above the slower baseline. That's a strong bullish signal. And across below, that signal's bearish momentum is taking over. But there's even more to it. The shape of that future cloud is telling you a story. A really thick cloud suggests a strong area of support or resistance. It's like a wall that'll be tough for the price to break through. A thin cloud, on the other hand, indicates a weaker zone. And what if the price is trading inside the cloud? Well, that usually signals a period of indecision or consolidation. The market is just kind of figuring out what to do next. All right, we've got the theory down pat. Let's move from just watching to actually doing. Here's a simple step-by-step strategy you can use to start trading with the Ichimoku Cloud today. Okay, let's put all the pieces together into a simple checklist. First, identify the main trend. Is the price above or below the cloud? That's your big picture. Second, wait for your trigger. That's usually a crossover of the conversion and baselines. Third, look for that all-important confirmation from the lagging span in the past. Fourth, check the cloud's shape up ahead. Is it thick or thin? That helps you gauge risk. And finally, for extra confidence, a lot of traders will combine these signals with other tools, like an RSI or MACD, just to add some extra firepower to their decision. So, with all this power, is the Ichimoku Cloud the perfect holy grail tool for every single trader? Well, let's take a balanced look and help you decide if it really fits your personal trading style. So on the pro side, you get multiple indicators packed into one, which is awesome. It's fantastic for identifying those big, long-term trends, and visually, once you get the hang of it, it's actually really intuitive. Now for the cons, it can definitely feel overwhelming for total beginners. It's not great in sideways or choppy markets. It tends to lag. And because it's based on longer periods, it can sometimes give delayed signals during really sharp, fast moves. And that really brings us to its core strength. The Ichimoku Cloud is an incredibly versatile and powerful tool, especially in markets that have a clear trend. Whether you're looking at major indices like the Nifty 50 or individual mid-cap stocks, it provides a really robust framework for making trading decisions. So there you have it. We've taken this complex web of lines, broken it down into 5 simple parts, and laid out a clear strategy. What once looked totally intimidating is now a structured forecast for the market. So the only question left is, now that it's all demystified, are you going to let the cloud guide your next trade?